Hey there, boo-boo. You gotta get the pips. Let me take a couple sips of my coffee. Uh-oh. My dog was gonna join us. Now she's leaving. To get the pips from the picnic biscuit, which is a lot like "You there, pretty boy," and how do you do to you? Or how about the aardvark? What does the aardvark say? I gotta get that. I gotta eat that because I'm an anteater. No, very similar. All right. Hang on, I want to get Forex.Today so we can do the calendar. Forex.Today. Forex news calendar. You guys ready to go? Who's live? Yeah, Daniel, it's more like, nah, he ain't going to rub my belly. I'm out of here. Waste of time. All right. Well, welcome to Forex.Today. It's a Monday. It's the beginning of a brand new trading week. Thank you for being part of the Forex.Today YouTube community of more than 18,000 foreign exchange traders. What we'll do today is we'll go through the calendar, look for event risk. We'll also cover dollar pairs, yen pairs, commodities like gold and oil and Bitcoin. We can do some exotics. There's a lot that we can do, and if I don't cover it, please ask. If I don't get to your question today, I'm also doing a webinar tomorrow and on Wednesday and on Thursday and on Friday. So thank you for subscribing to the community. Let's get on with it. 3, 2, 1, hit it! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ba! Hello, my name is Wayne McDonald. I am the guide on this journey we call Forex. So thank you for being here. I will share with you my 20 years of experience trading Forex, both fundamentally and technically. We can do a lot together today. So be sure to ask questions, get involved, take notes, write things down. And if you could, please, on the recording of today's video, which is available like 15 seconds after I end the stream, would you document the key takeaways, the key points, the things that you found most useful, even if it's just a chuckle. Document what you learned in the comment section below. And then, of course, may you please click the thumbs up button. Please tell YouTube that this is quality content and not just a get-rich-quick YouTube stream, but a value creation YouTube stream. Also, you're a trader, right? So you're going to need a brokerage firm. You're going to need a broker that you trust, one ideally with fast execution speed, narrow spreads, big swaps. TradersWay.com has earned my loyalty and respect. Please give them an opportunity to earn yours. TradersWay.com, open up a demo. You can have an MT4, MT5, C-Trader, a bunch of different platforms. I use MT4 still because I'm an old goat, but you might want to use MT5. They have that. You might want an ECN account. Cool. I like a variable spread. If you're a scalper, you might want a fixed spread. All of those are available at tradersway.com. How is Forex going for you? It's going all right. How about for you, Dan? How about for you? So I thought today we would cover the calendar. And we can go through the markets as well. Cool. So we'll come back to the calendar. Let's just do a quick around the world. Currently, yen is very weak and US dollar is very weak. Pound came back, which is really good because we had this blunt discussion in the swing trading group last week on Thursday. We went through a couple of live trades that that members of the community had taken on the pound, and they were mediocre, to say the least. The way of describing mediocrity is they traded pound dollar. That wasn't necessarily the point, but that if you did quick relative strength at the time, there were just better trades, better setups. Okay. Ultimately, if you're going to get lucky in the world we call Forex, it's when the trend bails you out of a mediocre trade. Because remember, it's not looking for right. It's always about looking forward, not what you had, not what you had done, not what actually came from it, right? So like Johnny's like, hey, but it worked out though. That's not the point, is it? The point is based on the information you had at the moment, right? It was less than maximum efficiency, right? Right? It was, you only had what you had, and from that make forward guidance. Now, if it turned out that it worked out, the way I look at it, and this is to myself too, not just to, but the trend can bail you out of a situation like that, right? Okay. So unless you have some sort of alpha where you're like, yeah, nothing's happened for 3 weeks, but if you look at my 50 years worth of data, it's going to come out some way, but obviously that's not what occurred. So it's just, that's why I, over the years and even decades now, have become a trend trader. Right? So anyways, pound went from mediocre now to quite good. Right on. Glad it worked out. Okay? Glad it worked out. Aussie's back. Euro's given up a bit. Kiwi is meh. CAD was good. Now it's not good. And Swissy is still basically doing what it was last week. So really Aussie and pound gained some strength. And dollar went from weak to weaker. And yen went from weak to weaker. Okay, so that's pretty good. So we could start by, we can look at some of these dollar pairs. Okay, so here's our monthly swing. This is basic swing trade, right? Basic swing trade. We're approaching the early conservative target for this trade based on the entry. So I'm long basically kicking off the central pivot. Right in here. Very cool. Okay. And of course, another one down in here, which is based on last month's swing. Okay. So really what we're looking for is the actual target is here based on the central pivot being our support. So the trade plan is, long at, this is long at 76 or a little bit less than that. No, 76. This is long at 76. This is long at 77. And the target is essentially 80. Okay, the short target. Okay, so 400 pips and 300 pips. Now, here's the challenge. Very often when we hit this early and we're approaching early target, sets up profit taking, doesn't it? So I got some things to ponder, don't I? Okay. Any feedback on the trade? Any questions about these trades? Thank goodness, right? I just happened to be on the strongest and weakest currency pair, doubled down. Very cool. Yeah, decisions to make. Yeah. So part of it is seasonality. Some of it is the setup. You know, this is supposed to go here, not 79, but 80, right? 79, 70. So, yeah. Okay. Well, Mohammed, as I explained last week and last month, there's a potential here for a calendar-based exit, not a price-based exit. So many of us in the swing trading community, we're thinking, Fed meeting in June, maybe Canada Day in July. So I don't know, but doesn't mean, there's a difference between being disciplined and being stubborn, right? Right? So put it this way, it could do this, and then this, couldn't it? So you could just book your profit. Oops. You could just book profit up here and then reset here. Okay? Re-enter, I should say, right? And cool. Okay. So whatever. I don't want to look at peso because I keep missing it, and it's a sad, sad story. They missed on CPI. You probably know that, right? Are you guys following Mexican inflation data? So that was, well, I should say more of the trend of it than the actual headline, right? Question here is, will the Jackson Hole meeting have tapering talk? Think about it. What happened on Friday with non-farm payrolls, and how would this influence the Fed? Do you honestly think the Fed is going to come out and say, we missed non-farm payrolls by 800,000 jobs, but maybe we should cut stimulus? No, of course not. Why? Well, first of all, they already told us they wouldn't, so I have to emphasize you need to stop listening to the media. You have to stop. All this hype and hyperbole. No one at the Fed is thinking about tapering. Only people on TV and in newspapers are getting you to think about tapering. The Fed have already told us when they're going to taper, why they're going to taper, and then when they're going to raise interest rates and why they're going to raise interest rates. And it's not this month, it's not next month, it's not later. Maybe if the economy stays red hot all the way through the summer, maybe they'll talk about talking about tapering. Okay? But we're not there yet. And so Jackson Hole, so if you come into the webinar and you're like, well, what do you think about Jackson Hole? They're going to talk about tapering? You're listening to the news. I can smell it. Okay? I can smell it. And instead, I would like you to pay attention to the rhetoric of members of the Fed. Read their reports. They do a lot of speeches, right? So when the president of the Dallas Fed speaks, you should listen. When the president of the Philadelphia Fed speaks, you should probably listen. The St. Louis Fed, you should probably listen. San Francisco Fed, you should probably listen. The Atlanta Fed. They speak all the time. And if you listen to them, what do they tell you? There's no way in hell they're going to start tapering at all anytime soon. So when it comes to Jackson Hole, what's the question? I don't even understand the question, right? The question is, you're listening to the media and they're hyping everything up. and freaking the market out. And if the market actually did their work, it wouldn't be a problem, right? Right. Could there be an unforeseen event? Then what are you talking, right? Then you're talking about a black swan. You're asking me to predict the unpredictable. And so for me to throw down an opinion would be inappropriate or really unwanted, right? Like, who cares, right? Right. By the way, I'm not picking on you, but I'm trying to get across an attitude, right? That's what I'm trying to get across. I want you to be an ass-kicking boss. And if you had a client that came up to you, well, I was watching and they said, and they're going to say, and the stock market's going to crash, right? And you have to say, whoa, settle down. Let's break this down into digestible pieces. Let's talk about what Fed policy is and what it could be and whatever, right? And you calm your clients down. Okay? Right? That's how I want you to look at it. Okay? By the way, various waves, right? Excessive inflation cause a reaction, right? Right? Excessive stimulus basically causing excessive inflation. I actually deal with this specifically in the macroeconomics course, but I take an hour and a half breaking down economic theory and models to explain why or why not. Okay? So I can give you an answer, but if you don't understand the context of why, then you're just repeating my answer, right? So I deal with this in the macroeconomics course that I'm recording right now. Cool, right? Cool. Anyways, so there's our kitty CAD. What's going on with CAD right now? Commodity prices are way up. US dollars way down, so just relative to that. In the United States, we've had a hacker attack on a distribution pipeline company here in the US, and so that was shut down. And I heard today that the government is doing like they put together a task force and they're going to do whatever it takes to get the pipeline back on, and it was really a strange response. Then again, maybe it's the media overhyping things, but or even misexplaining things. So like again, in the mornings I do listen to Bloomberg, and they were talking about the White House is going to do all this, and they're going to get together, and they're pulling all these resources, and they have this task force, and they're going to help fix this pipeline. If you look into what happened, the company was hacked, but the hackers didn't get into the pipeline. But the company said, oh my God, we're being hacked. So they shut everything down to avoid the hackers actually getting in. Basically, they shut off all the servers so that the hackers couldn't even try to get into the network. So the company is dealing with it basically internally. And the reason the pipeline was shut down was to prevent, right? But the way that Bloomberg had explained it was like the government were sending people in to fix this broken pipeline. I'm like, dude, nothing's wrong with the pipeline. It's not broken. The servers weren't hacked there. It's secure. But yeah, this company, right? This company is been impacted and they're dealing with it internally. But like, what does this have to do with the White House, and what is the government going to do to fix this? Like, it's so weird. Fix what? Nothing's broken, right? So, anyways, it's just really bizarre. But it's a great headline. Like, oh my God, save the infrastructure. All right, well, there's nothing broken. So be careful, right? Just be careful. So we're hitting this early target as well, right? So once again, good opportunity for counter trend. Let's take a look at them. So I'm almost at 2,100 pips right now. And by the way, I looked at this. It's actually wrong when I say that. Like this trade here, I've been saying is now 900 pips, but I shorted at 15,000, 28, and now it's at 14,000. So it's actually over 1,000 pips. The issue is 1,000 pips is only worth $800. So this is closer to 1,300 pips. This one here, but I break things down and I just say a pip is $1. So right now, it's almost 2,100 pips. It's not quite accurate, but you get the point. Not bad though, right? Not bad. Not bad. For sure. All right, so we got the Oz. Yeah, here's our pig dog. Let's do pig dog. Where was it? I want to be fair to the conversation. This is May, so these are weekly. I guess what we were talking about last week was this is the actual trade entry I want bulls on the pound dollar to be in. That's a regular everyday swing trade. So if you catch that, you catch that. You did your job and it's exactly the right time of day, right day of the week, all that kind of stuff. Like that's the good trade that I want swing traders to be in. Okay. I think the conversation was last Thursday, we had a bunch of people in here. And so we broke it down and, why and how and all that. And you can see where there's some unclarity here as far as technical analysis is concerned. That was my point, right? And that this at the time was kind of all over the place because this was before non-farm payrolls. And you don't know the response to non-farm payrolls, right? We didn't know it was going to be a massive shortage and all that kind of stuff. So we could be here, we could have been there. So this time it worked out. And a lot of this is actually US dollar. Now we also know pound, trades did rotate into the pound, but not at this time. You always have to ask yourself, what do we know? Okay, what do we know? What do we know? And what we know here is, okay, at that time, sort of mediocrity. If you were here, okay, you caught a nice little trade. So being up 30 or 40, 50, being your entry being off that high, really what you got is you're buying a bearish trend on the dollar at a psych level. But the other issue was, like, I had some of the same traders that went long there. I had them then look at Aussie dollar. And we agreed that the technical analysis, it was like the same type of trade at the same time for the same reason. But based on technical analysis, this one was just a better trade based on technicals. We're not talking about, well, what about imports and exports and what about the central banks of this country and that country? We weren't really comparing Aussie versus pound per se, but more like, how do we interpret the technical analysis for probability? That's right. So it was like an open conversation in the team of how could we improve our understanding of the probabilities, right? Because like the pound didn't look like that. The pound looked more like, okay, like this. And you're like, well, it could go up, it could go down. And of course, if NFP had been, let's say, the exact opposite, pound might have lost faster or more, right? So anyway, so I'd much rather you be buying dips like this. Okay, that's all. So pound did work out, but clearly Aussie also worked out, and based on a higher probability was just essentially lower risk. And that's what I'm trying to get to. How do we make decisions in the moment? Right? And one of the things, and we can all fall into this trap, I think one of the things that I heard from the traders that took those pound dollar trades was that they had missed a few and they were kind of stubbornly trying to get in. And I know that feeling as well, but right, that's kind of why, like, it's happened to me on peso, but I back away if I get caught in the mediocrity. So if you bought it here and it didn't work, and you bought it here and it didn't work, and now you're buying it here, like, at some point you have to realize this ain't up, right? You can't confuse with sideways with up. Okay? But the only way you can do it, okay, is when you do the monthly swing, you do the monthly swing and then you walk away. Okay? Doing a monthly swing at the end of an inside week on an inside month, it's just not a good trade. And look, it worked out. Doesn't mean it's good. Also, sometimes you can take a good trade and it doesn't work out, doesn't also make it bad. A losing trade isn't necessarily bad, and a winning trade isn't necessarily good, because what we're trying to do is the probability of it. Okay? So again, I was having lunch with my son probably 3 weeks ago when Dogecoin was probably 20 cents. And he's like, man, if you bought $10,000 worth of Dogecoin at the beginning of the year, it would be worth millions. And I said to my son, well, at the beginning of the year, it was worthless, right? Why would I buy $10,000 of something worthless? Well, because it's 20 cents now. Well, yeah, but it went from worthless to 20 cents. But at the time I had the opportunity to buy it, it wasn't worth anything, so I wouldn't buy it. Okay? So it's just kind of interesting. So now if you bought it at zero and you're a millionaire, great, but you basically threw away your $10,000. I mean, look, if you made a career, put it this way, right? Let's not even talk about Dogecoin. If you had a career of buying something worthless, hoping that you're going to make millions of dollars, then you're a venture capitalist. Right? Right? So if you bought 100 things that are worthless, what's the odds that one of them is going to at least give you your money back, right? 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 So anyways, and again, it's not commentary on Dogecoin. It's more of like, once again, if the probability is low, then the outcome doesn't make it better. And I have a problem too. If you buy something at 30 cents because it used to be worthless, but now you want to buy it because it's 30 cents, I would still have to ask you, well, where's the inherent value that you're buying? Like, shouldn't you buy something that is worth let's say 50 cents, but you have an opportunity to buy it for 30 cents? Like, isn't that why you buy it? You're like, oh, well, it's actually worth more. I'm getting some value here. There's some inefficiency in the market, right? I should buy it. Not, did you see what Elon Musk said on Saturday Night Live? Oh my God, I just lost 50% of my net worth. Like that, I don't know what to make of that. Have good luck, right? You're going to get lipo with your money. Yeah. Cool. So, anyways, we have a weekly, right? We have a weekly top approaching a monthly top. So you have decisions to make, okay? And part of the decision is how long are you going to hold it? Okay? Are you going for July 1st, or are you almost done for the month? This tells you Great British Pound based on last month. And that's why you got to be careful with your tools. You have to understand what your tools are telling you. Based on what happened last month, which is nothing, then this month should be about the same nothingness. Do you believe that to be true? I don't know what you believe. Have you done any research? Have you done any analysis? Are you listening to the Bank of England? Are you paying attention to the Fed? Have you made any real decisions at all? Joe says some of the things people are doing to promote Doges, I think, are unethical. I totally agree with you. Right? I honestly think Elon Musk is a genius with some spectrum problems, but I'm okay with that. But I think he looks at regular people with disregard. I think he respects engineers at his SpaceX, and his Tesla plants and stuff like that. But I think he just mocks regular society. I think he laughs at his investors. I think he laughs at the media and stuff like that. And he's like, I'm going to spend, millions of dollars on Bitcoin with my shareholder money. I don't understand why the people that own Tesla stock didn't freak out. They're like, dude, we gave you money to build cars, but you invested a whole bunch into Bitcoin. You made $100 million, right? You made $100 million last quarter with Bitcoin? Here's my problem with that. He was given money to build cars. What if he lost $100 million in Bitcoin? What would have happened to Tesla? So here's the thing. So he's that kind of guy that can also manipulate the stock, which I think is a problem. And if he can push Dogecoin, up 25 cents in a day and down 40 cents the next day, I think there's a problem. And I think he's laughing at everybody that what kind of fool would do that? I don't understand either. So again, I'm not critiquing Dogecoin. I'm critiquing those that would buy Dogecoin because Elon Musk pushes it up. I have a problem with that. And I think he just doesn't give a crap. If you're that type of person, I think he's just like, hey, why wouldn't you do it? If you were smart, why wouldn't you do it? So if he makes an extra couple of billion, that's how he does it. Good for him, I guess. But there is a problem, in my opinion. Okay. I do think it's a problem. Yeah, I do think it's a problem. But whatever, it's one of these things like, if you buy it and lose a significant chunk of your net worth, it's your problem, not my problem. Okay. But I have a problem of him doing it on purpose. Yeah. Yep. But anyways, we don't need to talk about that. That's all opinion. The opinion now is you need to decide whether you see how the tightening of the pivots. So you have to decide now, are we just going to stop here? And the pivots are saying, well, based on what happened last month, there's not a lot of buying. Okay? There's just not a lot of buyers. Between March 1st and May 1st, there just wasn't much of a market at all. No market. And this is what I was critiquing on Thursday of last week with the swing traders that were in that. I said, you got to be able to read this and say, look, there's no activity on this pair. There's no buyers. There's no real sellers. Okay. There's not a lot going on. The moving averages are compressed. The pivot points are compressed. So what is the basis for your decision to buy it? Dollar's going to be weak? Okay, well, okay, at least you're betting in the right direction. But what is the probability, right? So anyway, so it worked out. Okay. And so the question is, now that it worked out for you, is it a trade you get out this week? Or are you going to hold it till July, which means June should be higher than we are now? Currently, the target for June is here, but probably going to be closer to 45 if this does move up. So are you going for, it wouldn't even be 42. I mean, you're either getting out now or you're going to take it, 300 pips higher, or a combination of get out now, buy the dip, and then drive it up 400 pips. But that's the decision, right? Michael says, what's the difference between that and fads? Probably not much. Okay. Cool. So so that's my opinion on just investing in general, that we're trying to uncover intrinsic or hidden value, right? All that kind of stuff. But that's why I started the course at MIT on cryptocurrencies. So I would like a deeper understanding of everything, so I can have maybe a more expanded opinion. But I don't like any asset class that's pumped up. Okay. And honestly, I don't understand why Tesla people didn't freak out. He's like, wait, you don't make, right? You make cars. Wait, you make more money gambling corporate money on Bitcoin than you do cars? I'd have a problem with that. Seriously. Tesla, the car company, isn't supposed to be a hedge fund in cryptocurrencies. Right? You can't gamble corporate assets. I mean, I don't get that. I think the board should be very upset about that, right? Cool. So anyways, whatever. Okay, euro dollar. Euro's not really a good trade right now, but it's working out okay for me. Here's the two trades. Okay, what do you feel is missing on this chart? This is naked as naked can be. Should I be worried about this top, for example? What tools could I use to maybe plan better? What kind of planning tools can we use? Okay. Well, if you want to measure the trend, we could do something like there we go. Trend. You can do like a moving average. Okay. Okay. Anything else? Well, I'd like to add a leading indicator. Okay. And that's where I'll just switch this whole thing. And I'll go pivot point confluence. I'm just going to redo everything. All right. Okay. You're like, look at all the lines. I mean, I could simplify this, I suppose. Oh, where will my baby be? You gotta do away from me. All right. So maybe that's easier for some. This is the monthly target. This is the weekly target. So this says I can get this to 123. No problem. So I can get another 125 pips out of this. Thank you, leading indicators. Okay. Now I can back this out a little bit and say, not only that, okay, maybe it can go higher. We'll see. Okay. We just started the week, so I can't really predict anything. Okay. That's that. Cool, right? Get another 100 pips out of that. Cool, right? Okay. Let's take a look at some commodities, or do you want to do exotics? Which one do you want to do next? Commodities or exotics? Exotic commodities. All right, well, we'll do exotics and then the commodities. All right, decision-making time. Our target from, I think it was, 3 months ago, 2 months ago, was 14. So our general plan was sell at 15, which was the beginning of March. No, sorry, the beginning of April. And the target was sell it at 15, target 14. And we hit that about an hour ago. Well, I guess a couple of hours ago. I was looking at it earlier and we were just tickling it. What do you think of that? Sell it at 15, target 14. That's a lot of pips, bro. Now, looking at it more recently, this is the May 1st open. This is the first hour of the new month. Okay. And that says sell at 1450, which is a psych level, obviously. And that target, okay, suggests that we could head down to 1380. Now, remember, this is math. It doesn't take into account human psychology like, holy crap, we're at 14.0000. Oh my God, everybody get out. No, it just says, well, based on the math, if you look at this is 2 standard deviation below a weighted mean. Okay? Does that, right? 2 standard deviations below a weighted mean. Does that incorporate human psychology? Okay. Probably not, right? So you must make decisions then. Okay. Okay. Where the entries here but you can see mine is here. Okay. And I had another one here, and I exited here. This one was 500, right? I turned $100 into $500, and this one's still open. So this is $100 turning into $1,000. So this was only 500%. And now this one is currently at 900%. Internal rate of return, obviously. Okay. Yeah. Big Pippin, huh? I can just hear I can hear the song in the background. Right? Cool. So, once again, you're going to need to make decisions. La 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 la. Okay. Once again, good opportunity to make some decisions. Take a look at some commodities. Okay. We have this going up and up and up and up. We have an issue now with the pipelines, which once again may or may not impact actual supply. But the thought is, what is the market concerned about? The potential impact of supply. Now, I believe the pipeline is nat gas or gasoline and not actually oil, but whatever. It doesn't mean down, does it? So I don't know. Right now, technical analysis says we're just chugging along doing what we're supposed to be doing. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Okay? You can see the market popped open. Oh, look at that. One. Oh, they're right there. Sorry. There's like geese and baby geese like walking right past my office. It's just funny. You can hear the little baby geeses. Okay. Anyways, it's funny because you can hear them. All right, cool. So anyways, that's still going up. How about our gold? Our gold. We have a plan, Stan. Plan A, plan B, still in place. Our target, 1850. Once again, so this is about the fifth thing or sixth thing that we set up a week or two or three ago, and now we're approaching targets. How nice, right? Solomon says gold will fall. Wrong language. What you should be saying is gold is approaching a profit-taking zone. Right? Okay. Well, Solomon, you got to settle down, bro. You have to use different language. Nobody cares about your guess. Okay. So the first thing is you're talking about gold and then CAD. Well, let's stay with gold. The language here is that we are approaching a profit-taking zone. So there could be some profit-taking, which is difference between falling. Okay, a fall would be like lower low, lower high. And if you had a prediction like that, you have to follow it up with more than like you think you're going to sell it. What we have here is we use both technical and fundamental analysis, right, Solomon? So like for that to happen first, we're at the right price and a reasonable reasonable right time. That's what this suggests. This is the price, and early in the month can set up some profit taking. Great. Well, the next thing you would need is at least some sort of reversal pattern, but you also have this problem too. Okay? You have this problem where it's still making higher highs and higher lows and higher highs. So for you to say gold down, well, that's not the right language. What this suggests, technical analysis, right? Technical analysis will tell you to expect a higher low. Okay? Which is fine. That doesn't mean gold down. That means there'll be some profit taking, and maybe between now and this week, we'll retrace back to the central or maybe back down to 18, and then we need to make decisions whether we want to take it higher or not. Is there potential for it to come back to 1750? Yes. But still, that doesn't make it a bearish market yet. But what I don't want in the language is that you're saying this now, but there's really nothing here on the chart. And by the way, if you look at seasonality, that says dollar weakness. So even if gold gets weak, dollar's likely to remain weak as well. And probably, if you want to look at probabilities, probably be like this for a while. Okay? Plus, you're probably aware of central banking purchases of gold right now for devaluation of currencies like from India, which I explained in great detail during non-farm payrolls. Right, there is some central bank activity on purchasing gold. So I can see technically why you would say down, or what did you say, sell gold here or something. I'm like, I don't know. Be careful. There's more to it, right? Oh, you said gold will fall. Well, I would again say, look, if you're in profit here and you were concerned about the resistance above us, okay, sure, take some profit, which is different, right? Down doesn't necessarily mean fall. Okay, and then if we carried that out back to CAD, so we go to CAD and you say CAD up, I mean, dude, look, it's a downtrend. Like, why would you say up? Oh, it can't fall further. Well, that's just dumb, dude. That's just dumb. So you'd have to say, like, why and when would be good, right, Solomon? So, like, where's the technical analysis? Well, if it fell down to 1.200, I could say, look, there's a profit-taking zone for bears down there, which could lead to, let's say, a double bottom. And if you had a double bottom here, especially if it occurred today or tomorrow, that would send up a counter trend. And I would say this would take it back to 121.50-ish to maybe 122, but probably not. Because even if this is a Canadian dollar issue of weakness, what would make the dollar get strong? You would have to, like, explain it to me. Because the Fed policy and the likely Fed policy over the next several months is dollar weakness. So you're like, so Solomon, like, okay, I get it. Maybe you don't like the CAD economic situation and there's some, stuff going on there. I get that. But you'd have to explain to me why the world would be buying up the US dollar first. Right? You'd have to explain that to me. Explain this to me, Lucy, right? Why? So for that to occur, there would have to be a little bit of I don't know, some sort of, there would have to be something like, let's say a 5% decline in the U.S. stock market to get this to go up pretty reasonably. This would be the right price and the right time. I got you. But I need to see that. And even if this occurred, 5% decline in the stock market, I would say that's the whole, sell in May and go away. And to be honest with you, I'd be buying the stock market. Okay. Okay, you're watching it on a weekly basis, which means you might be a month early. But let's just look at it this way. Like, everything technically here says down. Absolutely everything. Seasonality says dollar will likely to weaken. So you'd have to, again, you'd have to explain yourself. You'd have to say, well, there's something going on way down here. Okay, you would have to say, well, we have some support here around 120. Okay, well, we're still at 121. Okay, so I get that. That's cool. Okay, I can see that. So this takes us down to 121 to 120 or 1979. And if that happens today or tomorrow, I would look for a counter trend trade. Okay, which would be fine. Okay. But once again, you have to, instead of logging into a chat and throwing down wild and, they're not wild and crazy, but just like unsubstantiated opinions, nobody cares. Just nobody cares. Like, who cares? There's no value. Okay. So when I say, when I have a predictive statement where I say nothing on this chart says up, but let me explain, why it's going to go up, I might spend, a half an hour outlining 5 or 6 different pieces of reasoning of how I got to that conclusion. So again, I must have written 100 papers at Harvard, right? So I would start out with my thesis, clearly stated thesis. Based on seasonality, I believe the dollar's going to go from strong to weak. Okay, great. There's my thesis. You understood. And the reason it would be this, and this. Right? So now I set up the rest of the paper. So now I got 3 paragraphs I need to write. I have 3 reasons why the dollar will go from strong to weak. So then, then paragraph 1 would explain issue number 1. Paragraph number 2, issue number 2. Paragraph number 3 would do number 3. Paragraph number 4 would challenge my own thesis. Right? Paragraph 4 would say, well, in the past, when these things haven't come together, these were the reasons. Okay? And then lastly, you would have to restate your thesis, pull back in your 3 arguments, and wrap up your conclusion. Okay? So that's how I think. So think of it like a scientific methodology. I don't mind if you're a bull and I'm a bear, or I'm a bear and you're a bull. I don't care about that. But you have to clearly state your thesis and your reasoning so that we can have a conversation. But oh, gold's going to fall? 0 value, right? Yeah, 0 value. Nobody cares. But I'm sure that's huge in other chat rooms, right? But we ain't like no other chat. Okay. I'm not here to make predictions. Coolio. Let's quickly take a look at Japanese yen. Oh my God! Okay, Aussie yen is up. Okay. This is something we did in the swing trading group last Thursday, so we were here. Okay. How do you plan the breakout? All that kind of stuff. There's your logic. First of all, this always sets something up, right? Like, we have a stabilized support here, logical stabilized support. So we're building up. Now, how do you know to build up? Well, we're building up based on seasonality with the yen, but also macroeconomic assumptions in our models for Aussie dollar. Things like increased consumption in America from stimulus leads to an increase in Chinese economic activity, such as productivity and capacity utilization in the factories, and an increase in demand in natural resource exports from Australia. Okay? So therefore, you use something like clearly supportive, but not bullish. It's just not bearish. Thrown in with your assumptions here, aka a model. Okay? And then you have this entry, which predicts this top. And of course, We go from Thursday, right, to Friday to a happy day or whatever. Happy day. I guess it was more like in here, right? There we go. So this must have been Thursday, right? Cool. So this is our swing trading group, and there's the basis for that trade. Can you talk about the monthly target? It's pivot points. Okay? So if you're using a pivot point, which is, think of it as 2 standard deviations above a weighted mean, someone else might say, oh, 86 is enough money. Okay? For this, though, this is an 84 to 83 entry. It's okay pippage, but that's not great pippage. So if you're going to throw seasonality in this, you might want to string together 2 or 3 months. Because, buying at 83, getting out at 86, that's a typical month. But this has taken 2 months. So you might want to go long at 83 and 84 and go for 90. And you're like, well, wait, how do I know to be in that long? Well, I know you're doing macroeconomic analysis, and you're doing research and making predictions based on your research about future growth or contraction in global macroeconomic activity, right? And then you'll say no. And then I'll say, well, no, then you can't. You can't think 3 months in ahead. You don't know what the heck's going on. But for someone else that says, yeah, well, I follow all this. I've been following the RBA, and I've been following Australian export data. And we all know, especially with the new CPI basket out of the Bank of Japan, there is zero inflation and zero chance there will be inflation, and that they will continue everything to keep the Japanese yen weak. Good. So that's free money there, and I'm plowing my free money into Australia, and that's because of Grandpa Biden throwing free money at America. You're like, wait, because of the fiscal and monetary policy in the United States, you're borrowing free money from the Bank of Japan and plowing it into Australia? And you say, yeah, faux show. And you're like, wait, I don't understand this. You're talking about fiscal and monetary policy in the United States. Yeah. So you're borrowing free money from Japan. Yeah. I'm converting my dollars, aka selling dollars, into Japanese yen, because I can get it for free. So now I got my Japanese yen. What do I do that? I sold dollar to buy Japanese yen. So now what do I do with my Japanese yen? I trade it. I go into the interbanking system, trade it for Australian dollars. Holy crapola. You're selling dollars because of the fiscal and monetary policy of the United States. And you're borrowing, really, using that as collateral to then borrow Japanese yen and then take the Japanese yen and convert that asset into a higher yielding asset that is likely to appreciate. Yeah. Yeah. We call that Forex trading. Isn't that cool? Thank you, Tommy. So what do you think, Michael? Is this going to last 2 days, 2 weeks, or 2 months? That is your job. I can give you some BS opinion, but what I want you to do is you can have your own BS opinion. You're like, well, I've been looking at all what the RBA has been saying. I've been reading the meeting minutes. I've been looking at their export data. I've been paying attention to the Bank of Japan. Been paying attention to the Fed and the White House. And I have my bullshit opinion. If you don't have the research, then it's not opinion, it's just bullshit. Right, Solomon? So I'm like, whoa, 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 whoa. I'm not saying that's what you had, but I'm like, unless you bring the other stuff, then it's not an opinion, it's a statement and nobody cares, right? So I want the research, man. I want the why before the what, or the what and then the why. Think, right? Scientific methodology. Tell me why. That's value, right? Yeah. That's what this channel's about. Cool. I want to know why, because it's a more interesting conversation. Okay. Cool. Look, boom. Sell anything or buy it, anything with a yen on it. Yup. Cool. So we did yens, we did dollars, we did commodities, we did, we did rand, right? And peso, just avoiding. All right, so let's do this one. Cool. Peccary says it's near impossible to present valid arguments. Yes, but what I'm trying to say, Peccary, is don't come in and say, buy a USD CAD. It's going up. We're not interested. So we're not interested in that kind of chat. I think other groups are probably, that's what you do in other chat rooms on other YouTube channels. I'd rather you ask a question than make some random statement. And of course, I have a problem. When you see a currency pair that's been just falling and 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 falling, and some guy just logs in and says, buy it. I'm like, dude, just don't. Right? Just don't. Just keep it to yourself. But you can ask a question. How about that? Right? State it as a question. But if you're like, well, I could explain why, but I need to write a 4-page paragraph, then just don't make the statement. That's all. Cool. All right, so let's take a look. Right? Let's take a look. Foreign direct money flowing to China, which is another way of saying money flowing out of the United States. Okay. Not a lot of inflation. Moving out to tomorrow. RBNZ, great. We've got to figure that out. So quiet. So far quiet. Yeah, I'm just skipping over things. GDP out of the UK. My problem with this is it's backwards looking, right? So how did England do a few months ago? I don't know if it's enough juice, right? Right? That's all. So we need sort of more forward guiding kind of stuff. So that gets us way out here to CPI in the United States of America. Okay, yeah, okay. Before you get CPI, you get PPI. But before PPI, you should be looking for wage growth. Okay? So right now we have a commodity shortage. What does a commodity shortage do? Well, actually, let me walk back. Let me go all the way back. Okay. What happened between 2008 and 2019 in the job market? Let's go there. Let's talk about that. How about 2009 to 2019? What happened to the U.S. job market? Increase, decrease, no change. Jobs, employment. in the United States, if I didn't say it well, in the United States from 2009 to 2019. Absolutely steady increase in employment to an all-time high. Okay? To an all-time high. The lowest unemployment in history. Cool. What happened to wages? Type in a question mark if you don't know. Huh? Dig, if you will, the picture. You and I engaged in bliss. Sweat of your body covers me. Can you, my darling, can you picture this? Yeah, try tapping that out and singing the words. Yeah, you got to be a percussionist. Yeah, nothing. Nothing happened to wages. Wages were flat. And it was a question mark. The Fed was really struggling with this. The Fed was struggling with this. And in fact, they were raising interest rates in anticipation of wages going up. And then they're like, wait, what? Wages did not go up. Why didn't wages go up? Why was unemployment so low? Think about it first. The second step is, let's talk about commodities. Commodities are at an all-time high, like copper, for example, is an all-time high. Okay? Why are commodities up? Bernard, the first thing you need to do is incorporate. Okay? Incorporate a proper trading company, not just some BS LLC you pulled off of a website, right? And the next thing is get a good tax attorney. Cool. Commodities are high because there's a shortage. It's not necessarily an increase in demand, but during COVID, humans were not taking iron ore and coal and combining them together in steel. They were not taking copper out of the ground and turning them into pipes. So on and so forth. There's just literally a shortage. Now, there is some increase in demand and stuff for sure, but it's mostly a shortage issue. A piece of plywood went from $30 to $100. I'm not joking. Okay? Cool, right? So prices are up. I guess I could do a quick chart, right? I could do a quick chart. We'll make this the chart. Oh, I should have made that black. Let's do it again. Okay, there's a chart. Demand. Supply. Okay, so the first thing you have to do is label. Prices, quantity, 0, 1, 2, 3. Price, 1, 2, 3, whatever. Okay, up is price. Okay, great. So this is supply and this is demand. Okay, so the question that we have right now is what happens if supply falls to supply 2? Well, okay, we went from quantity 1, we'll call 2.5, to price 1, which we'll call 2.5. Now we have less, and how do you know it's less? We went from 2.5 to 1, so obviously quantity went down. There's less copper in the world, so what happened to price? It went to 3.5. Price went up. And this is copper. Okay, the conversation now has to do with wages. Ha 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 ha! Anybody liking this? Now we're getting serious. Okay? This is a free Harvard degree. Let's talk about it. We're talking about wages now. If that's true with copper, what about wage growth in the United States? See, last time the number of employed people went up, but wages were flat. If you wanted a job, you could have a job. This time, the United States government came in and said, oh, you got no money, right? You got no job. How does it go? You got no money, you got no car, you got no woman, and there you are. Sort of like, you got no job and you got no money. Oh, don't worry about it. We'll just give you money. Now, I know it's unfair from a human perspective, because there are people that were very severely, impacted negatively by COVID and lost their jobs and all this kind of stuff. Okay, great. So I'm not talking about the humanity of it. I'm talking about wage growth or not. So last time we went from 10% unemployment to 3% unemployment, and wages did not change. Okay? Now, if you go through my town, and I've heard this from so I heard Gartman. Do you guys know Gartman? He was interviewed somewhere. He used to be a respected economist. I don't know if he's classically trained or not, but whatever. I would see him at conferences where I would speak, and he used to speak on TV all the time. Great. So he's some sort of expert guru. But instead of trading his own fund now, he manages an endowment for a university, probably one that he went to, right? So anyways, so he was talking about Virginia, and he said the same thing. You go to every store, every restaurant, every small business, they're all trying to hire people. All of them. He said all over town, there's help wanted signs. And I know that's true in my town in Georgia, in the middle of Georgia. I'm not joking. Every small business, every little restaurant, they're begging for people to hire, and they're not showing up. And this is partially true because you can earn pretty good money not working. And so the government stepped in to solve a problem, but of course created a problem. And government this is what government does. They have good intentions, and then of course very bad outcomes can come from that. So right now in America, we're moving back to closer to full employment, but you can't get the waitress to come back and work at Applebee's. Maybe because her kid still isn't in school, so she has to stay home so the kid could log in remotely, therefore she can't work, okay? But I can't get an Uber ride because there's no Uber drivers. The restaurants are short on waitresses, right? And I know at the gas station, they're trying to hire truck drivers to do the gasoline routes. I'm like, that's cool, right? But anyways, my point is this makes things different than last time. Last time, we had a different administration with a different point of view, with different advisors, and they had a different response than this time. So what's the consequence of the different policy is what I'm trying to get across. It's not a political statement. I'm talking as an economist. And I'm trying to explain it in ways that you understand. So now and then later in the future, you can take in this information, a complicated economic model, and make valid, educated investment decisions. In this case, the economy has come back. There's help wanted signs everywhere, but now there's a shortage in labor. Okay? And demand is there, but the supply, there is a labor shortage. There's a shortage in copper relative to current demand. So copper prices go up because who gets the copper? Who gets the next shipment of copper? You're like, dude, I'm in a business that needs copper. If I don't have copper, I can't produce a product. I have the orders. So I don't make money. I go out of business if I can't buy the copper. So you might bid higher. I'll do whatever it takes to buy that copper. And someone else is in the same situation and will outbid you because they also need the copper. So everyone's trying to get copper and you get a bidding war. Well, what if you're a restaurant in my little town and you need a waitress? The waitress can go to, I'm not joking, 20 restaurants. And the waitress can say, how much do you pay? What's the average tip? What hours do you have available? Okay, that kind of stuff. And she can pick and choose. And one says, well, we'll pay you minimum wage, which in America, I think is what, $72 an hour? Plus something, right? And they're like, oh, we'll pay you $2 more than the minimum wage, and you can have a free meal, and you don't have to work Saturday night unless you want to or whatever, or you don't have to clean the kitchen, or you don't have to take out the garbage or whatever. They're giving you all these bonuses, right? And they're competing. And of course, like bidding wars in copper, there's going to be a bidding war to get the waitress to work at Applebee's and not at Outback Steakhouse. Cool, right? So now wages are likely to go up. This time, but they didn't last time. And that's what's going to increase. So PPI is going up because of a shortage in copper, and CPI is going to go up because of the dual forces, because the input cost to make a product, because a computer company has to buy copper, okay, or whatever, I guess computer, because there's a semiconductor shortage too, but I guess because if you want to do it that way, because of a shortage in semiconductors, it costs more to build a laptop, and therefore you're going to have to pay more eventually for the laptop. But it's okay because you might be able to afford it because you make more money now. And what happens? That's where your big inflation kicks in, right? Hey, some guy is spamming us. He wants you to go to his currency stream. What do you guys think? He's so desperate he has to come into someone else's conversation and spam for viewers. What do you think? You guys interested in going over there? It smells desperate to me. Hey, why don't you just buy some advertising, bro? You guys can't see it because it got blocked. It's because we got the best moderators in the world, right? Yeah, he's a good Forex trader, but he doesn't have any money. All right. I guess that's it. So, wow, we covered like economic models, but we also went through the calendar, Did I finish the calendar? No, I don't think I did I? Let me continue. Sorry. And then we'll wrap her up. Thursday, PPI. Okay, so we already talked about that. That's going to be higher. I guess that's what it is. And there we go. Friday, retail sales. That's good. Okay. ECB is going to tell us something. Okay. Great. So that's good. Although, things could be worse in Europe, I suppose, right? Okay. Yeah, Maida's like, yeah, a higher wages doesn't fix anything. It's true. Because what'll happen is then you'll have to pay more for rent. Okay? Ultimately, and right, does anyone here live in a third world or emerging market country? These guys that right, typically live with inflation, and they'll tell you inflation's bad. Right? Higher wages, higher taxes, but really it has to do with higher costs. I don't care about taxes. Everyone's trying to save money on taxes. How do you change your tax bracket? How do you do this? How do you do that? Dude, just make more money. Okay? Pay your taxes. Just make more money. That's the solution. You should make more money to pay more taxes. So, if you live in a country that suffers from chronic inflation, it's bad. So, I don't know. It deteriorates everything, right? It's just so, it's not good. We don't want inflation. We want productivity. Okay? There's a big difference between an increase in price and an increase in productivity. So, right? So you'll find that prices going up is a bad thing. Wages going up is a bad thing. What you want is an increase in productivity and an increase in entrepreneurialism and an increase in global trade. And when that happens, everybody in the world benefits. But for that, you're going to need to understand reasonably complicated, in some cases very complicated economic models. But just trust me, that's the way out for everything. Okay? An increase in productivity, an increase in entrepreneurialism, and an increase in global trade. With a government that supports all of this and then by and far gets the heck out of the way. The government makes sure that there are roads and schools and laws and safety and equality and equal access. And then otherwise gets the hell out of the way. If we can have that, you'll watch. Everybody in the world will benefit. The poorest will become less poor. Right? People will live longer. They'll live healthier, both physically and mentally. There's more opportunity for education. There's a lot that can happen. And it's all good. So anyways, thanks for being a part of the Forex.Today YouTube community. I appreciate all that you do. Guess what? I'll be here on Tuesday, on Wednesday, on Thursday, and on Friday too. So again, thank you for being here in my office with me. It's been a great, hour and a half? That's really cool. Thank you for being here. Thank you for being part of the community and being a subscriber and all the positive energy that you offer me every single day and the loyalty and respect that you show. And I'd like to thank Traders Way for being part of the community as well. So visit tradersway.com, open up a demo. I will see you tomorrow. Cheers. Have a good day.